Hello and welcome to Sinomania. Chinese stocks zip, or do they zag? Some IPO news from ShenZhen, and a look at the US-China trade imbalance. Is it all bad news? On opening May 30, the Shanghai Composite Index dropped steeply, rebounded slightly, but then continued its fall and ended down 6.5% to close at 4,053.09. The news was the same across all boards, with close to 7% drops everywhere. The biggest losses were in B shares, reflecting the belief among jittery foreign investors that China's markets are too bubbly, and they may end up taking a bath. The Shanghai B market peaked May 21 when the B share index reached 365 points but closed May 30 at 302.9, down 9%. ShenZhen B shares fell 8.65% as well. The latest stock hiccup was caused, most observers say, by Chinese regulators' decision to increase the transaction tax on shares traded. This tax, a stamp duty, was raised from 0.1% to 0.3%. Not exactly the tax increase many headlines would have you believe. Markets are easily spooked everywhere right now as Chinese stocks were sinking. The website of a local television station in Tulsa, Oklahoma, once known as the oil capital of the world, falsely reported a refinery fire, and prices for crude oil in the United States dropped 40 cents a barrel briefly. It seems most commentators are now convinced Chinese equities are an investment bubble, and the focus remains on when, not whether, the burst will begin. The latest spin is that the boom probably won't be lowered until after 2008, or at least after the Beijing Olympics next August, since China's government doesn't want to run on the stock market to spoil its international publicity blitz. How, apart from a magic wand, Chinese regulators can control a market that is proving resilient to government interference and surprising critics with its fairly rational performance remains to be seen. Marry5.com, China's answer to eHarmony, has millions of registered users and a special true love secret formula, making it one of the most successful dating websites in China. Is partnering with MSN and other high-profile websites as a content provider and plans an IPO sometime in 2008. No other details at this time. The company is based in Guangzhou, so a listing on the ShenZhen exchange is not unlikely. Chinese companies continue to look overseas for listing opportunities. 3Nod Group, a maker of PC speakers out of ShenZhen, is planning an IPO on South Korea's Kosdaq exchange sometime this year. No other details are available. Shenzhen jewelry maker Fuqi plans to register a listing with the USA Securities and Exchange Commission for an IPO in the third quarter. Fuqi wants to acquire retail outlets to sell its jewelry. Sales of gold and silver jewelry remain very strong in China. Given the current obsession in some circles in the USA about the trade gap with China, it's important to keep some perspective. Foremost, the current account deficit that finances America's big trade imbalance is easily offset by foreign investment, principally from the two exporters most responsible for that imbalance, China and Japan. Secondly, and perhaps more important, China is becoming an important export market for the United States. 2006 exports to China were over $55 billion compared to Japan's $59 billion. The rate of growth of exports to China has been 5 times faster than exports to Japan for years. And the trade gap with Japan is still almost 40% as large as the gap with China. And remember, as big as Chinese imports may seem, they are still far less than America's imports from the country on its northern border, Canada. I'll see you next time.